Hello there, Mavericks. This is Imri, and welcome to today's currency recap. It is Thursday, January 25th. So as always, we'll be doing a comprehensive review of the trading day. I'll be taking a look at whatever meaningful news has come out of the day, as well as a look at the broader equity markets and a couple commodities. We'll then take a look at our proprietary currency baskets, as well as any major news events to close out the week. And we'll wrap things up by taking a look at some trade setups and opportunities in the currency markets. So in this currency recap, we will be using some advanced technical analysis. We believe technical analysis is the fundamental skill for every profitable currency trader. Maverick Currencies is currently hiring serious, technically based traders for a trader position. Traders will trade firm capital and keep 70 to 80% of the profits. So if you're a technical trader with a technically based trading system, we would love to meet you. So please click the application link in the description below this video. Now let's break down today's market action. Starting off with some market analysis. All right, so the big news for the day is we had strong GDP, 3.3% to close out the last quarter. It's well above the consensus estimates for most economists, which was right around 2%. Now, the dollar did rally strongly off of that, but so did the equity markets. Now, that's what's interesting, all right, is that the equity markets are cheering this strong, economic growth. However, what about the Fed? What about the Fed meeting next week and the Fed's very important decision in terms of what they're going to signal as far as the future of their monetary policy goes? If they give any signs or hints whatsoever that, well, hang on a minute, rate cuts are coming, but they're not coming anytime soon, that would be a devastating blow for equities. So we're going to take a look at a chart of the S&P 500 in a minute, and you'll see exactly what I mean in terms of why I think things are a little bit dangerous. But stocks had a great day today. Up on the day, crypto slightly down. I mean, being a little over 0.5% down is nothing for crypto. Gold mostly flat. Oil, big winner today, up nearly 3%. As far as the fiat currency side of things goes, the Canadian dollar was definitely a winner today. But, the US dollar hung in there, did pretty well, especially relative to, say, the euro and the Swissy. The Aussie and the Kiwi also did pretty well. And as you can see, the Swissy, the euro, biggest losers on the day, the pound slightly down, and the yen slightly down as well. And then as far as cryptos go, Bitcoin Cash up slightly, but everything else very slightly down. I mean, again, being 0.5% down in crypto is basically like being flat. So as far as the weekly outlook goes, or the market outlook goes, we're still at a +3. Nothing's changed. But when we take a look at this chart of the S&P 500, yes, we are +3, but you can't be blind to some of the danger that could potentially be lurking around the corner. Now, I'm not suggesting that we go out and short the S&P 500 just because it broke to new all-time highs, but be mindful of this divergence if you are trading equities. So you can see that the RSI peaked back in December, and it's significantly lower as far as a momentum reading goes now than it was when we were in December below all-time highs. I think all the risk is skewed to the downside here, and with next week's Fed meeting coming up, fast and furious, that is definitely going to be a volatility catalyst. Pay attention. We'll definitely talk more about that next week as well. All right, so here as far as news events go, we've got core PCE to round things out, or to wrap up the week tomorrow. Potentially a market mover, but I don't think that's the inflationary report that the market's really paying a lot of attention to. But nonetheless, it is coming out at 8:30 a.m. Eastern time tomorrow. Okay, heading now into some currency analysis, taking a look at our velocity scores. It's interesting. Volatility is somewhat contracting again. We have a bunch of currencies in the middle here. The loonie, the Canadian dollar, up at a +2, the euro and the Swissy at a -3, and the Kiwi at a -2 as well. So as we head now into TradingView to take a look at our currency baskets, we're going to see exactly what might be going on over there. So first up is the Japanese yen. Okay, so taking a look at the yen, you can see here that we're very close to the prior very important low from Wednesday, November 15th. From an Elliott wave perspective, it looks like that low should hold if we indeed have a legitimate 5-wave advance, which ended on December 14th. Now, this is a very steep pullback, yes, but we are within a zone where there could potentially be demand for the yen. So although I think ultimately the yen will be more bearish, perhaps in the long run, I also believe that we could see some mean reversion here, and that could mean some yen strength for at least a little bit of time. I'm being very cautious with the yen. I'm not really seeing any great setups one way or the other, but some yen strength would be very welcome from a trading perspective because the risk is so skewed in one direction of the yen. That doesn't mean that the yen can't just keep weakening and weakening and weakening, but it does mean that when it reaches extreme conditions that the potential for a snapback could be fierce. So you can see here we do have some bullish divergence forming. That's not enough to take a trade in and of itself. It's just something I wanted to point out. As far as the dollar goes, we're flirting with that overhead resistance from where we were trading back in late November and mid-December. I'm keeping a very close eye on this channel. If we break down and out of the channel, then I think we're probably going to revisit these lows in the dollar. If I zoom out a little bit, you can see that on the macro scale, we have a large move down here, lower lows, lower highs. This could be a counter trend pullback, and we could see another large leg of dollar weakness. So my bias here on the macro scale is to look for dollar weakness, but the dollar's been holding up pretty well since the end of last year, since December 28th. And I wouldn't be shocked to see one more push into this region where there could be some overhead supply. We could then be looking for a turn lower in the dollar. All right, the Swissy. Okay, so the Swissy has been weakening, and instead of creating a triangular trend continuation pattern, we're now trading in a descending channel. And you can see how well this channel is working. We pretty much just pinged off the top end of that channel the other day. And let's see if we can break below these lows now to tag the underside of that channel. So I like the idea of looking for continued Swiss franc weakness here. Okay, next up is the euro. Again, the euro's really, really interesting because we have this kind of flat bottom here. And this looks a little bit like a head and shoulders pattern, head and shoulders stop, where we have the left shoulder, we have the head, we potentially have a right shoulder forming. That would be an ideal setup in my opinion, because that could drive the euro to considerably lower levels. And that would be for a pretty exciting trade from a risk reward perspective. From a bullish standpoint, this high is very important. If that high gets taken out, then we have a low here, a high, a higher low, a higher high, a higher low, and then one more higher high, which would indicate that we are at least from an internal standpoint seeing some kind of bullish trend here in the euro. All right, our friend the pound. So we've broken above this resistance area, and I think that puts the next highs from the end of August 22nd, 23rd to be precise, in focus. So I'm looking for reasons to buy the pound. Okay, the loonie, we're trading within this structure right here. Today was a big day in the loonie, but I still expect this rally to fizzle out. And if we break below the lower boundary line of this channel, then I'd be looking to target these lows and then the lows from March 24th, 2023. So I definitely have a bit of a downside bearish bias here in the loonie, provided we can break down out of this channel. Okay, the Aussie dollar, struggling, definitely struggling. Had a nice day today. Oil making a bit of a comeback there, signaling perhaps some global risk appetite, which is an environment in which the Australian dollar could do well. But generally speaking, from a broad macro perspective, it's hard to find too many reasons to be sustainably bullish on the Aussie. But nonetheless, so long as this low from Jan 18th holds, I think we might see another little pop-up higher in the Aussie dollar before it gets sold. Okay, the Kiwi dollar is a little bit different. We've broken now below the neckline of this inverse head and shoulders pattern, and that's really putting pressure on the bullish interpretation here of the Kiwi. You can see here we're starting to make some bearish pivot points. So here we have a high, here we have a low, a lower high, a lower low, a lower high. I think it's likely now that we can play for a lower low here in the Kiwi. All right, so in terms of actual baskets and where the relative strength and weakness seems to be lining up, I like the pound. The pound looks pretty good here. Looks like we're trading sideways in a potential base. And if the Swissy can break down, that could be a really, really sweet trade. So that's a currency pair I definitely keep an eye on, is sterling Swiss. And you know what? We'll pull it up so we can take a look. All right, so yeah, look at that. We're taking a bit of a breather here. And if this develops into a nice sideways base, then that could be a great trading opportunity indeed. All right, so in conclusion, just remember, folks, we always want to be playing relative strength and weakness. Without that, there is no juice in the market, there is no volatility, and it makes good trading very difficult to come by. And hand in hand with that goes proper position sizing. And of course, all those things can be summed up by one simple statement, which is always follow the trading plan. All right, we look forward to seeing you next week when we're going to have our live FOMC class for our Mavericks. All right, that's it from me. See you guys soon. Bye for now.